Hi, I'm Ashley with Campbell. Thanks for investing your time to help your community be a great place to live. Before you watch the video, make sure to click the subscribe button so that we can help you make educated decisions as a board member.
Hi, everybody. Thank you so much for joining us. Welcome to Community Association Resort Style Amenities Sales Tax Matters webinar. This webinar is for treasurers, board members, finance committees, and lifestyle directors, and is intended for those that have that have exposure to the association's finances. Our speaker, Bill Kilgallon, will be happy to answer your questions by email if we cannot get to them during the course of this program. However, we did go through the questions we received in advance and included them in today's presentation. And I'm Beth with Campbell Property Management. Campbell's been in business since 1953. We manage condos, HOAs, co-ops, and country clubs. So we operate exclusively in South Florida, and we are locally owned and operated. In today's seminar, these are the items that we're going to go over. And also, here's just a brief introduction on Bill. Bill is a very highly credentialed tax professional with over 35 years of public accounting experience. He's very involved in the FICPA community and frequently travels to Tallahassee to serve on behalf of Common Interest Realty Associations, also known as community associations. Bill's with Stroemer Company, which is a statewide firm. Here are some of the services that they offer. And here's just a disclaimer about the content contained in today's presentation, and you will be receiving a copy of this presentation after, so you'll have a chance to read this in greater detail then. Here's an outline of what we're going to cover today. The Florida Department of Revenue, who are they and what do they do? Activities subject to sales tax for the association, activities not subject to sales tax for the association, activities subject to sales tax for clubs, sales tax audits, and then plenty of time for Q&A.
So thanks, Beth. I guess we're going to start it off with some crowd questions, and please respond if you know. What is the biggest tax fun fact about Florida? Anyone knows? Want to take a guess? Do we see any hands, Beth?
You know, for some reason I cannot see the Q&A, so I'm going to try to figure that out while you explain the next step here. Oh, I can see the chat, but I cannot see the Q&A. So let's just keep moving.
Okay, so the biggest fun fact in the tax world about Florida is the fact that everyone that's down here knows that there's no personal income taxes. And in today's world, that's a great thing. The second fun fact question that I want to ask is, does anyone know what holidays Governor Ron DeSantis has enacted here in the state of Florida? What holidays? And that's an easy question to answer as well. He's enacted 2 sales tax holidays. One is that everybody probably knows about is the start of hurricane season is tax-free sales tax for approximately 2 weeks in June, just before the start of the hurricane season. And the second one, for people that are a lot younger, is there's a back to school sales tax break at the end of July into August for those children going back to school. So last question is, what does FLDOR stand for? And for those that probably know that, it's the Florida Department of Revenue. So those were the 3 fun questions I started out with. But one of the first issues that or matters that I want to talk to everyone about is your association and the formation of your association. Chances are, if you're a condo or a HOA, if you look up under SunViz, you have been formed as a Florida not-for-profit entity. And the most important takeaway from that is it doesn't mean that you're not subject to tax. In Florida legal terms, when you form under that guise, Florida not-for-profit, it just means that you don't intend to generate a profit. And certainly associations aren't looking to generate a profit. They're looking to collect the operating fees that they need against the expenses that they need to pay out. So they're looking basically to break even. So that's the first point. That's why they form under a Florida not-for-profit. The second is the fact that in connection with that, it is a corporation and you don't intend to pay dividends. When you're a normal corporation, you pay the profits out of your business back to the shareholders via dividend, not in this legal status. So anyone that has a Florida not-for-profit, remember, it doesn't mean that you're tax-free federal or state. Then the second thing, the second point that I want to make as well, is that this presentation was really born out of me watching too many commercials that advertise, that developers put out there that advertise resort-style amenities and, the lifestyle. And what people are seeing on TV is all these activities, okay? And the Florida Department of Revenue is chomping at the bit because they're subject to sales tax. And so that's why the seminar was really born about it, because I know for myself and the community that I'm in, that people are looking to compete with these new developments, and they're starting to do different types of events and social activities. And so the Florida Department of Revenue, I can tell you, will be sitting back in their offices at their computer, and they'll be investigating it on the web. Thus, the real reason for today's.
Yeah, let's talk about the Florida Department of Revenue. So everybody knows who the IRS is and what they're all about. But people that are new to Florida or new to community associations may not be familiar with the Department of Revenue and what their role is. Can you tell us a little bit about it, Bill?
Right. So as the slide says, there's really three main programs, okay? There's a child support program. So those people that are in arrears from paying child support basically get the support taken out of their W-2. And so that comes under the Department of Revenue. It's the General Tax Administration. So that's got a couple of pieces to it. It's basically has the sales and use tax, which is the largest, generator of revenue for the state. It's also got the corporate income tax, and it has oversight over the audit of the Florida unemployment tax. So those are the three basic tenets that are under that. You can see the next point, the Florida Department of Revenue collects more than $40 billion a year in taxes, and probably a good 90% plus of that is the sales tax. It's the biggest. The corporate income tax is extremely low compared to other states, and most of the organizations down here, or most of the companies down here, are not organized as a C Corp, but instead they're a partnership or an S Corp, which aren't subject to tax. So that's the second reason why there isn't a big draw on what the corporate income tax brings in. And then the last piece to that, of course, is the unemployment tax. And basically what it's more of an annoyance, because under an audit, they're going to go in and they're going to look at people that you give a 1099 for, and they're going to allege that they're employees and that you should be paying the unemployment tax. That's more of the nuisance end of it. So the next point is they process more than 9 million tax filings annually. That's because everyone is probably relegated to filing a sales and use tax report on a monthly basis. So multiply that by all the users that have that, along with the few that are corporate income taxes and the like. The next fun fact is that they distribute nearly $3 billion in what they call the discretionary sales surtax. And it's nothing more than really a local based tax. So for example, if you're an ex-New Yorker, it would have been equated to your county tax. You've got your state tax rate and you've got your county. And what happens is the counties actually, set out policies to collect these taxes. Like, for example, in Palm Beach County, there's a portion of the sales tax that's collected that goes towards the schools. So that's what that discretionary sales surtax is. It's collected with the state, which is usually 6% in Florida for the state tax, and then the state divvies it out to the various counties. The other thing that happens here is under the FLDOR is the property taxes. So there's basically a real estate property tax, and anybody that's an owner down here knows that because they probably just got their tax bill for this year. It's usually distributed out on October 31st, and it starts it starts for payment November 1st. You can get a discount. So that's actually overseen by the FLDOR in the event that there's some issue with what the assessments are that your property has. And the second piece of it is a smaller situation where there's a personal property tax for businesses in Florida as well too, and that's based on the property and the assets that you're using in your business. So really, all that's under the DOR umbrella. I sit on the state tax committee, the FICPA state tax committee, and we meet with the Florida Department of Revenue in person at least once a year to go over some of the issues and legislation that may have been passed in that year to build a relationship with them. And so I know quite a bit. It's helped me in my career simply because of the fact that I do a lot of audits down here, and there's times where I need to sometimes go back to them. So with that, we're going to talk a little bit about the community associations that are subject to tax. I'm going to skip the sales tax for a second and hold that in abeyance. Whether you're a cooperative, a housing cooperative, you're a homeowners association, or you're a condo association, you have to file federal taxes. And in some cases, depending on how you file federally, you're responsible to pay also or file a corporate income tax return in Florida. And that applies to housing cooperatives and some associations, whether they be condos or HOAs that elect to file Form 1120 in lieu of the 1120H. So the largest contributors, obviously, to the sales tax is going to be the hotels and resorts, and they actually collect approximately 12.5 to sometimes 14% on the hotel stay and or the resort stays. And that's the bulk when you think about Disney and all the other resorts up in the Orlando area, or even down in Key West, for example, that fills the coffers here. So with that, we're going to go into the activities that are actually at the association level that we're going to be talking about today. And that is basically, as we say in the first bullet there, it's on admission fees. So admission fees basically are events that fall under the guise of, or the definition of, what Florida calls as admission fees. So it could be food trucks coming in to your association. It could be in-house shows. It could be movies that are being held. It could be bands, comedians, holiday events in the clubhouse, club activities within the HOA itself, maybe tennis, maybe pickleball, maybe the bocce. It's those activities where there's admissions fees is what's going to be subject to sales tax. And that's the type of amenities that we're going to be really talking about today, and what the potential exposure is in your particular community. So in the event that the association itself is running a particular event, they're going to be the parties that are responsible for collecting the sales tax on that admission fee, reporting it to the state, and paying the sales tax that's being collected. And in addition to that, it's the reporting monthly. So that's where we're kind of going with this presentation. And of course, in concert with that, if you're going to be responsible for the tax, you have to register to collect, report, and remit the tax. So that's a big chunk of what an association might have to do when they're putting on these particular events. And, you know, CPA firms can work in concert with your management companies to help you make online application to register. If after today's session, you find out that you are subject to tax and that you should be, they can help you in setting up the online registration and also the ancillary piece, which is a subsequent reporting, which is an online, and then the payment, which is online as well too. So there are some caveats that I'm going to warn associations. You can certainly go online yourself. One of the things that I found out early on is that when you do go online to register, there is some first questions that are asking you, who are the people on the board of directors? And so in one particular association, I entered the board information that they gave me, and I couldn't go any further because those board members were not the same board members listed on the Florida SunBiz. So they do sync up with other information that's out there. So you will hit a stop if something doesn't correlate with what's on SunBiz. Well, once again, you know, you can reach out to the management companies or to your CPA firm to help you get registered and help you get started in the process. Once you do it, you identify the activities, it's a piece of cake. But it's basically this time now where there's a possibility, if you're subject to the sales tax, to the collection for it, you may have some exposure. So with that, we're going to dive a little bit deeper into the activities that subject you to sales tax. So, and you know what, in Florida, just like every other state, and even in federal law, there's always exceptions. You know, people build in, you know, but for this and but for that. So the rental of a parking space, okay, is something that's subject to sales tax. However, there's an exclusion if the association decides that they're going to bill the renter a one-time bill for a 12-month period at one point, then the rental payment that he's making isn't going to be subject to sales tax. If the association, on the other hand, is going to bill somebody on a monthly basis, or they might rent the spot one month and not the other month, then they're on the hook for whatever payments it is. Second area that a lot of associations may be deficient in is a storage unit rental or a boat dock rental. That is subject to sales tax. It's based obviously on the rental amount that you're paying, and they are clamping down a lot on the dock simply because, you know, all they need to do is take an overview of the association's property and they'll see boats that are there. The second area that's always been subject to tax is a key fob and the door decals or the window decals. Those are what gets you in and out of the gates. The value, those are what's subject to tax. If you're an owner and you have the ability to rent a clubhouse, that's also, that rent that you pay is also subject to tax. And here's where we get into the real depths of what the if, whats, and who's. Handyman services. So if you have a concierge service in your, say, condo, and that includes you sending out a handyman to make a repair or do something in one of the units, and it's billed by the association, normally just sending out that handyman to do something in the unit is not something that's taxable, except when they actually bring, say, a light bulb in and screw the light bulb in. That makes it a taxable event. What wouldn't be a taxable event is if there's a hurricane coming and that same handyman goes in and closes the shutters out on your deck, that is not subject to sales tax because it's solely a service. It's not putting in any tangible personal property. And we'll get into some more of the nuances with that. And it's only really when it goes through the association management company for that particular person. The other is the commercial office or retail space rental. So the big high rises that you might have down in Miami have a restaurant or retail on the bottom floor. Well, the rent that you charge those folks is subject to commercial rent. And so that's separate and apart from the rental taxes that I'm going to be talking about for the living accommodations. There's rent charged on meeting room rentals, beach chairs and umbrellas, vending machines, a restaurant or cafe rental. So for example, there might be some associations that have space in their property that they lease out to a vendor that provides restaurant or cafes. Well, that rent that person's paying is what's going to be subject to tax. Then you've got food and beverage sales for an association managed restaurant, cafe, where the association keeps the proceeds. Normally what we see happen is in that particular case, the sales tax is captured through point of sales software. And once again, that's got to be remitted and reported on a monthly basis. And then the last thing is sales tax involved on cleaning, the concierge services that we just talked about, in some cases valet, and then the security. The security is most likely going to be billed to the association, and on the invoice they're going to separately state the sales tax, so that's not worrisome. The concierge service we just talked about, and depending on how the valet and the security just around the building is set up, is going to dictate whether or not it's going to be in an invoice or not. And then the other item is commercial cleaning. So typically what the association manager needs to look out for is companies that are going to be cleaning the association's windows or property. Because your property is considered residential living accommodations, it's not subject to it. If it was a commercial building, it would be subject to sales tax. So those are the distinctions that are there. But if you flip through your association's financials and you look at the different streams of income, you might want to look at the different captions and say, hey, could this possibly subject to tax, and should we be collecting on it? A review of it is probably a good thing as far as that goes. So when we get down and we peel back the association amenities activities, we also have some tax on the actual living accommodations. So what happens is on the sale and use and rental of living or sleeping accommodations, any units, that's owned by the association and rented out without a lease that goes 6 months in a day is going to be subject to tax. Okay. If it's a 6 month and a day lease and it's in writing, there's absolutely no collection or requirement to collect the sales tax from day one. However, if you're going month to month with this person, then on a month to month basis, you need to collect and remit it. The tax itself is called a transient rental tax, and it's got two components. Remember when we first opened up the presentation today, we talked about the fact that you've got a 6% state rate and then a local county rate. Well, the local county rate, they use the term applicable discretionary local sales surtax. So that's going to be for your locality. So depending on where you've located, like Palm Beach County is 1%, it would make the total tax due 7%. And what happens is when you go, well, first of all, you need to collect the right amount. But when you go in and file that return online, it's going to ask you the county, and it's going to automatically calculate the amount of tax that's due for that county. So it's not a big deal in terms of the software and filing the return. It's pretty clear cut. Here's the issue that I've seen come up. Owners who rent their unit or home are responsible for the reporting, collecting, and remittance of the tax. And that same 6-month thing becomes important as well, too, because if you've got a lease, once again, for 6 months and a day, you're not subject to the tax. Remember, it's going to be the association that's going to be subject to the tax on the units it's owned. So what I've seen is the associations buy back units that are in foreclosure and then rent them out. Now the tide has turned where they're worth more, and then they decide to subsequently sell, but in the meantime they're renting. And that's where it's important that you pay and collect the rent at the association level. I've also had cases where the community hasn't really been thrilled about letting I guess unit owners rent out their property. And there's been some cases where people pick up the phone and they call the Department of Revenue just to check to see whether or not, they're paying the sales tax. So it might be something that, you want to consider if you're not doing it now. Okay. So we also touched on this, the commercial rent tax. Once again, it's office or retail space. It may be street level, or it might be a restaurant. In any event, it's subject to tax. Now, the state has been dropping the state portion of the commercial rent tax for a number of years. And right now, the state tax rate is now down to 2%. By the way, just as a fact, it's only a handful of states that charge commercial rent, and Florida happens to be one of them. And the county level rate is 1% here in Palm Beach County. You need to look up where the property is to see what the local rents are. You can go out to the Florida Department of Revenue website, and they'll show you what the applicable surtaxes are or surcharges for the various counties. So how does the Florida Department of Revenue, find out? Well, they look online, they look for advertisement. If some owner is renting their property and they're renting it out on the internet, then, chances are they're going to investigate it. They're getting very, very sophisticated in the way in which they can find things out. They know that VRBOs are normally collecting and paying the tax. They're basically looking for folks that are out there that are advertising and renting and not collecting the tax. The next thing, activities, the fun part, activities that aren't subject to sales tax. So here, this is an important distinction, because I know that you're going to go back to your board or perhaps your management company and ask about this. No matter what, the collection of whether it be monthly or quarterly reserve and special assessments are by statute not subject to sales tax. So why am I saying that? Well, I'm saying it for two things. The intention was never to tax people, because people were paying for, I guess, not activities, but for the subsequent maintenance in advance of what it was to take care of the property that they had purchased. And so really, it's not a tax on income, it's really a reimbursement of expected expenses. So there was never the intention of that. So what some associations are doing is they're looking at all the events that they hold, and they're when they're doing their budgets now, they're carving out a piece of what they're going to sponsor and collect it in your quarterly maintenance. Well, that piece of that assessment is not going to be subject to sales tax simply because it is part of the quarterly assessment. And obviously the state can't come back in and try to assess you sales tax, but the rest of it, if it's only a portion that's being subsidized, would be subject to tax. And it's all dependent on who's holding the event. Is it the association? Is it the club, the underlying club that's there? We're going to get into that in a minute. Or is it the vendor that's coming in is taking care of everything? He's collecting the ticket price and everything's on him. The second thing, these other items here are other items that are not subject to sales tax as well. So if you get a fine from a violation, that's not subject to tax. Neither is late fees and interest income. Neither is application, estoppel, insurance, and legal settlements. They are also not subject to sales tax. The rooftop ground leases for cell towers come under a communications tax, and as of right now, that tax has come off. But there is food and beverage sales in a restaurant or cafe that's managed by a third-party vendor. We talked about that a little. In that particular case, it's the vendor paying rent. It's on the vendor to collect the monies and the sales tax that he's charging for the restaurant that he's running. So what about the sales tax holidays? We talked about that. I don't know that there's an opportunity for an association to take care of a sales tax holiday. If it was anything, it would possibly be the hurricane. I would think that, you know, if we're talking about hurricane preparedness and maybe they buy water or other provisions, you know, maybe that would be sales tax exempt. I'd have to look into that more. I know that on the individual level, you know, going up and during that period, they don't bat an eyelash. They just don't charge you the sales tax.
Now, this next section focuses on clubs, not country clubs, but the clubs that you would typically have within the community association.
And right, and here's the thing with the clubs. This is going to get a little bit complicated. So it's my understanding that in most associations, different people form clubs. So it might be a tennis club, it might be a fitness club, and they usually seek permission from the association to start this club. But they are separate and distinct from the association. They can't take any monies and commingle them with the association's finance, whether it be in the operating or the reserves. And that is a big no-no. So the question is, you know, what happens in that particular case? Well, it's on the actual club itself to go out if they're sponsoring something on their own, and basically collect and file. But before they do that, they're going to have to form a legal entity in order to get a federal ID number, to open up a bank account, to basically, you know, act as a club with the, you know, with the activities that the club has. So I'm not sure, simply because we as management companies or CPA firms don't necessarily get involved with the clubs themselves, the ones that I'm talking about now, other than the fact that, you know, they can't commingle and can't have activities that are intertwined. So it might be something that you want to go back to and kind of educate these clubs to see whether or not they're registered in do they have any exposure? Obviously, if the DOR comes in and decides that they want to, conduct an audit, it's not going to be on the association, because obviously they can prove that, they're not collecting the admissions fees and the like, but it could potentially be on the clubs to substantiate what they need to in terms of that. So the last part of this is I've been talking about admission fees. But if you look at this slide here, the definition of admissions is so inclusive that there's virtually nothing that's not considered an admissions when going down and reading this. And so it would be a good idea to potentially look at this particular slide for the admissions and see if any of those activities that you have that you're charging, a fee for could really be considered an admissions fee. One other important point is that if an association hasn't collected sales tax for prior years and you get a knock on the door from the Florida Department of Revenue, there really is no statute of limitations for the department to limit the look back period. They can go back to inception technically. And so if you get any type of notices like that, my recommendation would be to contact us before you get that notice if you think so. But look into it further and see, whether or not it makes sense to evaluate it and look into reaching out to your CPA or your management company to get help further on how to proceed. Sales tax audit. So I'm going to spend some time on this and make you feel better about some of the audits that I won versus a few that were painstaking. So there are certain CPA firms that have been certified to conduct Florida sales and use tax audits on behalf of the Florida Department of Revenue. So that means you would get a letter from the department. It would be turned over to the CPA firm that's certified. And instead of the auditors from the Department of Revenue, it would be the people within the CPA firm that would go through your books and records and conduct the audit on behalf of the state. And that's a good thing because, if you do happen to be with a firm that does have somebody that's certified to do it, that would be my recommendation. Second thing is that CPAs can also negotiate what they call a VDA, a voluntary disclosure agreement. So what is that? Normally, if you think that you could be subject to tax, you engage a CPA firm and they contact the state on a no-name basis, and they get the state to agree to limit the look back on the prior years. And so that's beneficial because if you were subject to tax beyond that 2 years, you're really saving yourself. And that's why you should always consult with your tax advisor, just to make sure that you have the information you need to make an informed decision as to what to do and which way to go. As I've been saying throughout the discussion here this morning, don't wait for an audit, okay? Contact your CPA. He can provide you with a checklist and actually help you look at the activities that might be subject to tax and get you on the right trail. Once the state contacts you for the audit, it's usually too late to submit a VDA. So what are the type audits? There's basically two audits that can occur. One is a desk audit, and that's normally when the state goes out and they send you a letter saying that we're auditing you for sales tax for a 2-year period, blah, blah, blah. Please turn over your books and records, and they're going to give you a list of questions in which you're going to have to provide information and write the replies. The notice of audit is actually an audit in person performed at your property. So I would prefer the desk audit because it isn't as intrusive as an audit in person, but there might be cases where, you don't have that opportunity to be able to negotiate whether you want a desk audit or basically an in-person audit. But I will tell you, as I've been stating it throughout this presentation, the DOR has ways that you can't believe in terms of looking to see if people are compliant. So as an example, I had a condominium on Palm Beach Island that got a desk audit from the Department of Revenue. And so rightfully, they picked up the phone and they called our firm. And so I was able to get a power of attorney, and the auditor forwarded the questionnaire and the years that were under audit and the like. And it was for 2 years. And their assertion is that the association didn't pay use tax, sales and use tax, and that they owed the state sales and use tax. And I'm like, I've had a hard time believing it when I read it. And so I said, can I come in and look at your list of vendors? And so they did. I looked at all the vendors that they were using was in Florida. If you were subject to tax, they were collecting and paying the tax. I went through some of their expense categories, and I didn't see anything. So I have happened the good stance of actually dealing with this auditor. So I called him up and I said to him, listen, we got this desk audit. I said, I've gone through everything. I don't see where you guys are asserting that they owe tax. So he says, give me a half an hour and I'll call you back. So he did. Called back and he said, listen, he said, this was pool deck furniture bought from a company in Tennessee via credit card, and it was shipped to Palm Beach. And we were in the weigh station when the truck from Tennessee came in, and we have a copy of the bill of lading, and there was no tax paid. So you say to yourself, how would they know? They were sitting in the weigh station because they knew that this company was selling merchandise from Tennessee with no tax from Tennessee, nor no tax from Florida. And all they had to do was wait for the truck coming through the weigh station. And that's how they got caught. So they're pretty sophisticated. So I had another situation where there were rental units at a condo that were being rented, and the DOR and advertised out on the internet, and the DOR knew that there wasn't, because they were short-term rentals, that they weren't six months or more. So there were people that got turned in for that. As I said, VRBOs usually will collect the tax and remit the tax when the property is rented through them. So that's another worry. And then I just want to talk a minute about sales tax on clubs, actual clubs, golf clubs and the like. The state's focus on that is primarily on conforming to the sales tax on beverage and food. taxable sales in the pro shops, and other sales subject to tax. Most clubs have a point of sale system software in there that identifies the taxable items. It's sometimes the one-offs that you potentially have issues with. One of the clubs that I had, for example, did a renovation of the clubhouse and the kitchen. And we kind of did a scrub on the sales tax that was paid. And one of the things that we looked at, once again, one of these one-offs, is they hired an interior decorator. And so the interior decorator provided services to them. So her invoice wasn't subject to tax. What we had to make sure was that she didn't sell them any furniture, because if the furniture was sold in concert with her services, it made both her services and the merchandise subject to tax. Another fact with a club up in Jupiter that I had a sales tax audit on, the auditor went down to the penny on some of these taxes, and it turned out she was looking at an invoice for bushes and shrubs that were put in the median on the entranceway coming in. And after she gave me the invoice for me to look at, I saw that there were bamboo plants there, and I made her take the tax off the sale and refund us, because bamboo is considered an agricultural plant / food, and it's not taxable in Florida. So she was pretty upset when she got no money from the audit and had to actually give us a refund. So that's a fun fact. And then the last one I'm just going to tell you about is actually a business that I did a couple of years ago. And the unfortunate part about this is that they had a sales tax 3 years before I got there, and they had over $100,000 deficiency. And what happened was that that caused them to generate another audit in year 4. And in year 4, everything was pristine. And so Florida usually employs people outside the state as auditors. And so this person that was assigned to the audit was from Texas, but she was originally from Palm Beach. And she loved the fact that she was going to come in on an audit and hopefully sit in Wellington at the corporate headquarters for a couple of weeks, and she could do some holiday shopping. And so I pushed back on the fact that she wanted to come in. I said, let's first of all determine, how many invoices you're going to look at and pull. And no, I wanted to come in. So I said, okay, fine. So when she came in, I didn't put her in the Wellington corporate offices. I put her out in a barn in Belglade, because that's where the books and records were. And I can tell you that she was not happy. And after a week, we had a no change audit, but for the fact that on the last day, she pulled some vendor invoices for cleaning. And as I said earlier, cleaning of commercial is subject to tax. And when we looked at the invoices just had an amount to pay. It didn't have the sales tax listed separately. And I reasoned that they should really go back to the company and get the tax off of them. And they were insistent that it was going to be a no for that. And that was because they weren't registered for sales tax to start out with. And so for $3,000, we ended up giving in. So the word out is, if you get a notice, give your CPA a call and make sure. So Beth,
Thank you so much.
I think that's it. I don't know if there's any questions out there.
We do have some questions.
Okay.
So I'll start with the first one. Please confirm that we need to collect sales tax for the following: show tickets, New Year's Eve parties, exercise classes, and any social event where residents pay a fee to attend.
Correct. That's an admission fee, subject to sales tax.
Thank you so much. And then we have a request to elaborate more on admissions. This community does not currently charge for pool, tennis, etc. usage is part of the monthly assessment fee. However, a small fraction of unit owners use these amenities, and those that don't ever use them feel they should not pay the full amount of the maintenance and operational expenses.
Yeah, so that's a two-part answer. Number one is that's very common that I see. And especially it's more so obviously at a club, because I've had a couple of high-end clubs where there's a lot of Canadians, there's snowbirds, and there's a minimum payment in the dining room. And so those folks that are getting assessed, well, everybody gets assessed for it, but they're not using it. And that's something that's an internal issue that they've got to, basically solve themselves as a community. And so, if you're not using it, that's, you got to make a decision what you want to do. If you do participate in that activity, obviously, if you're going to go to the restaurant within the club, you're going to be subject to whatever's taxable as far as that goes. And that's going to be the portion of the tax that you're going to have to pay. And obviously, the club or the association will be filing the tax return for that.
Okay. The next question pertains to league play. So all players that sign up for the league pay a one-time fee, which goes toward prizes and the banquet at the end of the league's season. Is this subject to sales tax?
Yes, but it all depends on whether it's the association that's charging that fee or it's the club that should be doing it. Once again, it gets back to that question: is the club taking the money, and or is the club then putting that money into the association? The club should be separate and apart from that. So it would definitely be an activity that would be taxable to the club if they were a standalone on their own. And also if it was being sponsored by the association and they were doing the collection. Some people do get around that. I'm just gonna go into that for a second. At my development, they've had food trucks and they've had some bands and what have you. And in some cases, they've had those vendors actually sell the tickets and it doesn't go through the club at all. So it's not really a worry.
Okay, perfect. And Bill, can you elaborate a little bit on employees that work in the guardhouse? Some security companies state that just by changing the person's title, that changes whether or not the association has to pay sales tax on those services.
Yeah, that's a great question. Thanks for that. So what some security companies have done, first of all, security services, whether it be guard or somebody at the gate or what have you, those services by statute are subject to tax here in Florida. What some security companies have done is they've changed their NACS number, which is the type of industry or service that they're in, to a non-security, and they change the title and the activity that person has from actually being a guard or the security at the gate, and that's how they bypass the sales tax. The sales tax should really be charged by the security company through the invoice that they give to the association. And so the real onus is obviously on the security company to properly state and collect the tax. But I've heard that in some associations they've replaced the guard at the entrance with a greeter, and all that person does is wave their hand at you and they don't check your credentials, and thus they think that they're skirting the security services that would otherwise be subject to sales tax.
Thank you, Bill. And we have another question. If you charge outsiders to golf in your community, does sales tax need to be paid on that? So I'm assuming this is a community with mandatory membership where the association owns the golf course.
Yes. Yeah, that's sales. It's not only subject to sales tax, but it's going to be subject to income tax on their return, even if they file as a C7, which is a club. And that's because there's a notion that you've got two buckets of people. You got member, non-member, and typically what happens is the non-member activities are definitely subject to tax. So whether it's a greens fee, or you buy something in the pro shop or the like, that would be subject to tax. And once again, if it was a regular club, they usually have a point of sale system to identify that. And they've also got to keep track of that, because if they're a C7, they're limited to the amount of non-members that they can have.
Okay, excellent. So I think we've pretty much answered all the questions that we have received. And of course, we will be sending out the presentation and a link to the recording later this afternoon, along with Bill's contact details. So if you do have any questions, he will be very happy to answer them. So thank you very much for joining us today. You will be receiving a survey in just a couple of minutes popping up on the screen. We would appreciate it if you would complete the survey and let us know what you thought about today's seminar. And we look forward to seeing you at a future event. Thank you so much.
Thanks for watching. For more great educational content, click the subscribe button now.